Hello, and thanks for taking the time to listen to Reimagining Cyber. New episodes of the podcast drop every Wednesday. So to make sure you never miss a show, do hit the follow or subscribe button wherever you listen. You can also find us on the @Reimagining Cyber YouTube channel. Welcome to Reimagining Cyber. I'm your host, Rob Aragao. Cybersecurity isn't just evolving, it's accelerating. From record-breaking M&A activity to AI-native startups reshaping the market, the landscape is moving faster than ever. So what's really driving it all? Joining me today is Eric McAlpine, founder and CEO of Momentum Cyber. We'll break down insights from the latest Momentum Cybersecurity Almanac, explore the rise of a two-tier market, unpack what this supercycle means for CISOs, and look ahead to how hyperscalers and frontier AI companies could transform the industry. Eric, thanks again so much for joining us. I'm really excited to have you on the show today. To get us started, just give us a top-level understanding of what Momentum Cyber is all about. I know you've been at it for quite some time. It's become really successful, really excited about that. And then lead us into the Momentum Cyber Almanac and what it's about again as well, and the value that brings to different folks that really should be consuming the information that you're sharing out there.
No, thanks for having me, Rob. I'm really excited for this discussion. Momentum Cyber and the Almanac, they really kind of go hand in glove. Momentum Cyber is the world's first and still only investment bank that is exclusively focused on the cybersecurity ecosystem. And what that really means is we're all in on cyber. It's the only language that we speak. Every single member of the firm, from back office to client-facing, understands the cyber ecosystem from the moment they stepped in the firm. We have training programs. We have heavy content. We really marry a research platform, which I'm going to get into with the Almanac, to a banking team. And so we feel like we go a mile deep and a mile wide. You got to go a mile wide because the sector is a mile wide, right?
Absolutely.
It's a very broad and noisy sector. And so you got to be able to touch out all corners of it to be relevant as an advisor and to get deals done. But at the same time, you got to go a mile deep because each one of these sectors has so many contours and nuances to them. And the sectors are bleeding over, and some of the sectors are eating each other. And so it just becomes this complex ecosystem where I felt a dozen years ago that the world really needed a focused firm on this space. And the reception has been nothing but overwhelming and warm. And we've been able to work with some real iconic industry luminaries in the space. And we've done deals with just about every major strategic, from Palo Alto to Cisco to Microsoft and so on.
Excellent. Well, dig us into the Cyber Almanac. What's it about? What are you kind of, top level overview of what just was released?
Yeah. Well, that's our latest tour de force. That really was a labor of love. I hired a young man that I need to give a lot of credit for, Jake Pollock, about 6 months ago. And Jake was the head of research at another firm that was more horizontal in nature, focused on technology, but not just cybersecurity. And when I presented to him, what our vision was and where we were going to take our research platform, we have a behind the scenes big data platform that has tracked every single move in cybersecurity, from not just M&A, mergers, acquisitions, financings, but we actually track employment growth within companies.
Okay.
So we look at funding. And so to kind of correlate how fast companies are growing from a headcount perspective, married with how fast they're raising capital. And in some cases, it's decelerating, right? And that's interesting to note those. And we can get into how companies, as CISOs, should track companies based on headcount trends and capital formation trends. And I'll give them a little playbook here because there's so many private companies in the space. But really getting it back to the Almanac was able to put all that data into one place. We essentially open sourced it, if you will. Now, we're not going to open source our actual cyber cloud data platform. That's private to us. But what we did is we took as much insights as we could put into a couple 100-page report. And we laid it all out there, not just by the numbers, but really behind the numbers. And that's what I preach to all of the young bankers that come into the firm, which is anybody can parrot this information to you, Rob, right? And there are other reports. You've read other reports. What was so special about that report? Why was it a tour de force by Richard Steinen, right? One of the kind of OGs of industry analysts. It really was because we looked at it not just through a lens of who bought who, but why did that transaction happen? What was the motivation for that deal? Was that a good deal? Was that a bad deal, right? And to sort of look a little bit beyond the numbers to behind the numbers. And that's what the Almanac is. And I wanted it to be a tool for practitioners or builders, if you will, right? People are thinking about moving into a category. Should I do that or not, right? Use it as a study and use it as a tool before you go and form that LLC on LegalZoom. And
Well, I think that's another big value point, honestly, from my perspective, into the Cyber Almanac that you guys have developed and delivered to the market, is that it does kind of cover both sides of the coin, right? It's the traditional, hey, the vendor market wants to look and see kind of what's happening out in the space to get more kind of, validation, if you will, of what their thought process is and their research is showing them, and additional context to support those different actions they may be taking. But then to your point, well, what about the actual side of the customer? What about the CISO's perspective? And how does that help them as well connect the dots? So I think the blending of it together from an audience perspective and the takeaways each can take back to, support their organizations and whatever path they're going, it's tremendous. We've had Richard Stein on the podcast not that long ago, maybe about 3 to 4 months ago as well. So this kind of really nicely ties things together. It's the next evolution. Absolutely.
Well, when we're on the topic of Richard, just because I'm so community focused, and we all got to help each other out, right? We're all defenders in this fight against evil. His book is coming out in a few weeks, so Guardians of the AI Age, and he wrote a forward for the Almanac. He was the one that really helped convince me 6 months ago that we really needed to change the cyberscape and we needed to add a category for AI security. And he was writing a book on it. And then I said, well, then why don't we collaborate? If we both see the problem, then why don't we both collaborate for the use cases for our audiences? And so that's how that happened. And we came up with this thing called Cyberscape 4.0. And you can now see that it's 2 years ago, we had no space on our landscape taxonomy for the AI category. And today it probably takes up a third of it. And I would say if we're having this conversation next year, Rob, it's probably 2/3 of it.
Very likely.
And then eventually it's just the landscape, because AI is just this horizontal revolutionary technology, right? That is kind of pervasive across all categories.
Yeah, I couldn't agree more, for sure. And actually, glad you brought it up about Rich, because we're actually having him back on upon his book release as well. So good. Great information. Take us to your point of view at the current landscape from a cyber market perspective. What does that look like? We've had some pretty serious movement here over the past several months. You kind of alluded to a little bit of that, so, who's eating who type of thing. And it's not just the cyber players acquiring additional cyber capability. It's also the other folks buying into other parts of cyber now. So talk a little bit about what you've been seeing.
Yeah. The only constant is change, right? But what we've seen over the last year is a huge accelerant to change, right? And we were all comfortable with change in these tech ecosystems, right? But what we saw was a significant amount of change in a very short period of time, predominantly with these every strategic was open for business for inorganic acquisitions. And we had seen companies shut down or just kind of go quiet and not focus on that for 2 or 3 years, kind of post-COVID. And that's when we saw a lot of private equity activity in the space, and the kind of PEs dominated the landscape of kind of strategic activity. But, whether it was CrowdStrike announcing 2 deals in a month, you saw Nadav, who took over the reins from Gil retiring, certainly deserved so. Gil is the real, OG in the industry and
Pioneer.
Yeah, true pioneer, and what he's done for the Israeli cybersecurity culture, as belongs in the Hall of Fame, quite frankly. But M&A really wasn't in his DNA, and he was a company builder, and he built one of the most successful and most profitable companies. And Nadav is over there, and he's making change pretty rapidly with all the organization's buy-in. And if you look at the market caps and the stock prices of Checkpoint and Palo Alto Networks over the last 5 years, I mean, they've had different trajectories, and Nadav is out to solve that. And so if you follow the people and follow the money, you'll start to follow M&A. And that's what I always tell people, follow the people. Watch, when Thomas Kurian went and left Oracle as the co-president and CEO to be, along with Safra, to take over the head of GCP, the head of Google Cloud. That immediately was a tip-off that Google saw that it was falling behind, and it was, and that they were going to make some inorganic moves to catch up. And now they fancied themselves as the security forward cloud provider, hyperscaler. So follow the people, follow the money. And when you see these people move around, you're seeing people move now from Google to OpenAI, right? You're seeing people move to Anthropic. And so that's what I think is going to change in a significant way is we've, in order to kind of determine and be a deal maker in this space and try to predict who's going to buy who, which is kind of very difficult to do, quite frankly. But, to kind of understand people's strategic priorities has never been more challenging because now we have hyperscalers that are moving into our space. There are a lot of adjacencies. There are people that have been kind of on the sidelines and cyber aware, cyber curious to, hey, we need to have a cybersecurity strategy, right? And that's services firms, that's product firms. And so the wagons have kind of circled around our space and it put it really into vogue over the last 18 months. And we saw a lot of companies outside of cybersecurity buy companies within cybersecurity. I asked this trivia question the other night at dinner. I asked someone, how many individual buyers of cybersecurity have there been since 2010, Rob?
Individual. I really don't know.
So Cisco is about 28 companies. Palo Alto is about 24 companies. CrowdStrike is about 10 companies. His answer was 20. I said, you're way up. 1,568.
Is that right? Wow.
There are less than 20 public companies in cybersecurity, right?
No kidding. Unbelievable.
About 800 of those are private equity firms. So take those off the table. So about 781, public companies or strategics, if you want to call them strategics, right, have purchased a cybersecurity company in the last 15 years.
Yeah, I knew the number would be high, but I did not think it would be that high. That's insane. Wow.
This is not a private fishing hole.
It is not.
This is open to the public.
It sure is. And I think you shine a light on one of the key areas too. Is it's also a little bit of kind of the insight from the business that you're in essence, the leading indicators. Follow the people, understand kind of what their obviously pedigree is and what they've done successfully at whatever organizations they've been at, and that will lead you to kind of, hey, this is what the strategy is wherever they're going and being a part of next. So that's a great piece of information to share out there. I want to talk a little bit about, again, all these things really are moving from different perspectives, but there's, as you talked about with me before getting onto the recording here today, there's this two-tier market motion as well as this super cycle that we're currently in. So just help the audience understand really what that translates to.
Kind of two-tier market, what we mean by that is the haves and the have-nots. There were 400 M&A transactions last year in our space. That means if you subscribe to the Ocean, no one knows this data perfectly, right? That there's 4,000 plus cybersecurity companies. 1 out of 10 companies was taken. That's called a land grab, right? Some people have kind of described that as a land grab. That's one data point. The previous year to that, we had about 300, but in a normal, healthy M&A market in our sector, there's about 200 to 250 deals a year. We're now trending to 2x what used to be a normal market, right? So there's two things that are driving that behavior. One of them is this land grab, if you will, which is a lot of M&A, like AI, focused deals. The other is companies that were seed and Series A funded in the 2020 to 2022 range, right? There's also that post-COVID, we call it ZIRP, zero interest rate policy era. Money was free. If I can give you money if you can loan money for free, asset prices are artificially inflated because there surely should be a cost of capital, right? Money shouldn't be free. And so we had some inflated Series A and Series B valuations back then. And those companies just weren't able to efficiently deploy the capital. And then some of them got sort of leaked, if you will, by these new age AI native companies that have been able to produce product almost out of the box, right? Super quick. And I can give a couple examples of that. So what you have is you had some companies that were kind of this built of the legacy mindset being disrupted real time by these new AI companies. Nobody wants to fund them, right? They want to put money into the AI companies, not this company that got its A round in 2020 that hasn't gotten very far in go-to-market or sales, but has a great team, but they just need to find a home for the technology. And we saw about around 100 of those deals. That's why you have to look at the headcount data. If you look at headcount 18 months prior to an acquisition and headcount at time of acquisition. Now, not everybody has this data. We have a way of getting it, but and so does Richard, as a matter of fact. And I think I think we have a similar method, but we've married that. He doesn't have the transaction data like we do. So then you marry the transaction data up with that, and then you can determine wherein are companies breaking out. And what we determined was it was about that headcount. If you can get the headcount up to about 50, you probably have raised enough money to have not only a very solid engineering team, but a growing go-to-market team. And what you'll see is companies that were below 50 and certainly below 30 that weren't able to raise another round of capital, they started shrinking headcount. And then if you saw companies get to 50 employees or more and were able to raise another round of capital, then the insiders had realized this is working. Hit the skinny pedal, more gas in the tank. When I say 2 tiers, there's kind of the haves and the have-nots. I think Mahendra at Secure Octane once wrote and I think it's still out there because there's, the internet has receipts. So if you write a TechCrunch article, it's probably going to be out there forever, but it is stuck with me forever, Rob. He said, this is like 2018 or something like that. And he wrote this really cool article on TechCrunch and he called it Cybersecurity, Unicorns and Cockroaches.
I'll have to go back and look.
You have to read it. It's a classic piece, and I love Mahendra. And so he wrote a piece, and he was right at the time. I mean, you could be a cybersecurity company, and you could raise a seed in an A round, and you can get this company to between 5 and 10 million of ARR, and just hang out forever.
Yeah.
Right.
Yeah.
But now with AI, the innovation cycles, the capital being used as a strategic asset, that playbook just no longer works. And so that created a tier, kind of a lower tier of the market that needs to kind of be cleaned up. That underbrush, if you will. If we're a forest, we do need some fires. We do need to clean out the brush so that some of these big trees, especially these redwoods, can flourish. Because we do have a very healthy market at the upper end.
Yeah, but that's a great understanding now of how you define that 2-tier market with the haves and have-nots. Talk about the lead into this, right? This is now the super cycle that we're in. And you talked about a little earlier, right? What we've seen with CrowdStrike, Palo Alto, ServiceNow jumping into the mix, right? So all these different players.
Oh, ServiceNow. I've tried to sell them so many companies over the years. I'm so happy they're in the market because at least I feel like I was right. I was just too early on some of my great ideas for them. But that's another great example of follow the people and follow the money, right? When Donahue was over there, it was very much a not invented here mindset. We built our entire platform on the Service Cloud. And if we buy a company, we're going to rewrite its code. And that's almost impossible to do at scale. So they would buy little tiny companies and integrate them in and become features of ServiceNow. Now they're buying entire categories, right? It's a completely different mindset. With McDermott, who came from SAP, and SAP was built by acquisition, right? So there you have it. This super cycle is for real. 2024, I think the number was 13.6 billion in capital was raised. So call it 14 billion, just a round number. Last year, a little over 21 billion. So it's like, that's 50% more capital was raised. Okay. Now you would say, oh, wow. Okay. So how many more companies did we finance last year than the previous year? The answer is fewer.
Interesting.
We increased the number of dollars deployed in the sector. Right. So by 50%, that's huge, $7 billion more. We shrank the number of companies we invested in by 20%. We're down went from like 1,000 and a little over 1,000 to a little over 800. So capital is a super cycle. What does that tell you? Well, if you really look deep into the numbers, Rob, we're starting to see like seed rounds and A rounds being collapsed. And we're starting to see B rounds and C rounds being collapsed. And part of what is driving this is the fact that we're starting to see successful serial entrepreneurs on their second and third acts. And regardless of the outcome of cyber reason, but Lior is a brilliant young mind. Right. And I don't even think the ultimate outcome of that was his, I'm not trying to blame fault or even put it in. I'm not trying to use that as an excuse. He created a company that at one point in time, investors thought was worth multiple billions of dollars, regardless of his own. He's a super talented guy. Okay. So if he's going to do it again, They gave him 100. What was the number? I can't recall the top of my head whether it was 130 or 170. It was for a first round financing. You can only do that if somebody has seen you in action and you have had success, right? It's like you only get an A-Rod contract to go to the Yankees if you had A-Rod like success at the Rangers and the Seattle, right? You have to. He's a serial successful baseball player, right? So people are going to bet on those jockeys, and you're seeing that with look at my very good friend Eric Foster and what he's doing with the first agentic AI SOC. It truly is the first AI SOC. No product a year ago. Stealth. Today, that company has 10 million in ARR and Fortune 500 customers, including major banks and financial institutions, and a platform that they were able to build in months, not years.
Yeah.
Right. And they raised a $27 million Series A with Greg Clark and the folks at Crosspoint, and is going to have a massive Series B. People are collapsing, saying that's success. Okay, put more on that. And so why did deals drop from 1,000 to 800 while we saw capital deployed for 14 to 20? It's because of Leo, it's because of Eric, it's because of Varun at Endor Labs, right? With his massive success at Redlock, which created Palo Alto Prisma, which is a deal that I worked on, by the way. So, but to see that and to see, and the team at, Demisto, again, and what they're creating with Dscope. So we didn't have second and third acts 5 and 6 and 7 years ago. Everyone was on their first act as this industry was really growing. The first second acts were companies like CrowdStrike and Cylance and Mandiant because of this little company called Foundstone. I don't know if you remember Foundstone.
Yes. Oh, no, I do. Absolutely. And everyone that came out of it. Yeah, you're right.
The Foundstone Mafia, that was my first M&A deal, dude.
Foundstone was?
Yes, Foundstone. I was an associate.
What, they went to Symantec back then? Was that?
McAfee.
Yes.
Yeah, Dave and Ken Gonzalez and the team over at McAfee bought them, and then, everyone kind of stayed. George became the CTO for a little while.
Stuart then goes off and does this thing. Yeah, for sure.
Yeah, Stuart goes off and does EPP.
Yep.
George does EDR.
Yeah.
And the rest is history. Well, come an $87 million deal, which I guess in today's terms would be what? A couple $100 million. It's 2006. So it's about 20 years ago. So whatever the math is,
right.
It'd still be considered a great outcome, a $200 million exit. That's a home run or a triple.
Okay.
But it's not a grand slam out of the park like the companies that those guys went and formed afterwards.
Oh, absolutely.
So there just weren't a lot of those, right? Until recently. And now we're starting to see these second and third acts. And I think that's another reason why we're seeing the super cycle is.
Makes sense. I want to transition a little bit now, Eric, into the CISO. We kind of talked about, the two sides of the coin, as I talked about your almanac being able to serve. And the CISO at the end of the day is part of, our listening audience pretty effectively. And we've also had many, of course, on at different times. So for consolidation, rationalization of all these different cyber solutions, because again, it is just such a sea of, in some cases, noise. You have to figure out how to cut through. But from a CISO perspective and their teams, like what's the aspect of really consolidation for them? What's the path forward? What do you see that to be?
It can be a real frustration point, quite frankly, in the consolidation. It's in consolidation, and there also you have to talk about rationalization. Sometimes companies just go out of business, right?
Sure.
Or they become acqui-hire and the product no longer is supported in the way that it was originally intended to, or the vision that was pitched to the CISO.
Right.
I was at dinner 2 nights ago in Kansas City, and I was at the dinner. It was a group dinner, and it was a leadership team for a really exciting, emerging company. And they kind of asked me to come in and provide some thoughts to the leadership team. And they have there's now this new role like field CISO, right? Or somebody that's just close to the customer that was the customer, right? So you're starting to see CISOs come out, kind of retire, if you will, and then, join forces with a really hot startup. And so, he's in that role. This person's, he's kind of a CISO, I guess, but, 20 years in the business, seen everything, and was describing to me about the pain of having to invest heavily into a tool and watch it be merged into a platform and essentially become a feature of some bigger platform that they didn't buy or invest in anymore and was no longer supported. Or another pain point was being pitched by a hot company that's on the cutting edge of some, I'm going to pick on posture management, right? Because everything became blank, blank, blank.
Put a word in front of that, posture management.
Blank, exactly. I'm going to call my business banking posture management, I guess. Investment banking posture management, IBPM. You heard it here first.
Driven by AI at the end of it, you'll be good. Yes.
AI native IBP. Oh, that's a mouthful. So, he's telling me about this story about, hey, this young guy came in. I really wanted to just bet on him, and I really believed in him, and he had so much passion and vigor and reverence for what they were doing, and the POC was going great, and we went ahead and put a purchase order in, and we did a 1-year deal, so we didn't make too much of a commitment. It's like 6 months into the 1-year deal, they go out of business.
Oh,
I was like, what? You told me everything was going fine. I was like, well, did you ask him? Did you look into his background first of all? No. Did you look at the funding path of the company? Right? And if any CISO has a question that listens to this thing, wants any information on the data that's in the almanac, you can email me. It's eric@momentumcyber.com. I'm very accessible. eric@momentumcyber.com. If you want to help me suss out whether I believe a company is going to be around in 6 to 12 to 18 months, I'm happy to look into cyber cloud and tell you what thumbs up or thumbs down. But and then look at the round of the last date, and then look at the data. Like get a LinkedIn Pro account. Do not get a LinkedIn Pro account so that you can see headcount 18 months ago and headcount today.
Yeah.
And if you sense any stalling of that company, you just be cautious.
Big flag.
Big flag. So those are my those are my tips to that. And I do believe the Almanac helps do that, helps to spotlight that. But if there's some obscure vendor or anything like that, or anybody on your audience has a question, they can always reach out to me.
Excellent. I want to close with you looking forward over the course of the next, let's say 12 months at this point in time. And we've talked about kind of the 2-tier market motion. We've talked about the super cycle that we're currently in. If we're having this conversation a year from now, I mean, what's your crystal ball telling you?
I wouldn't be surprised if we were talking about an acquisition of another very large cybersecurity vendor. So to think that Google took a huge bet with Wiz, what Cash moved into a category that they said they would never move into. We're not an identity company. We're a perimeter company. We're a defender. No, now we're an identity company, right? We're a platform company. Well, there are bigger categories that they're not playing into today. So I think we're going to continue to see large acquisitions. We're going to see several substantially large acquisitions by traditional consolidators within our space. But we're going to see some very large acquisitions, some very meaningful moves by these frontier AI companies and the hyperscalers. Those are the ones that I'd be looking over my shoulder with. It's a very successful EDR company. I won't say the name. I was talking to the chief strategy officer. He reports to the CEO, and he said, "Eric, who do you think we're going to compete with this year for M&A?" Right? And I said, "You guys may be bought." "Oh, who's going to buy us?" I said, "Well, these companies now have market caps measured in the trillions, right?"
Absolutely.
I mean, so
yes,
the ability for them to make a substantial move into our space in a meaningful way and buy, a Palo Alto or a CrowdStrike or a Zscaler,
it's possible.
Is not out of the question, right? I mean, it's pretty easy for a company with a market cap of 1.5 trillion to buy $100 billion market cap because they're 1,500 times bigger. It's just the math, right? And so that's where my prediction is. I'm looking at these frontier AI companies. I'm looking at a good example. Albert Lee leaves Google after a long and successful storied career in their M&A group, and he becomes the head of M&A at OpenAI. What do you think Sarah and Sam are thinking? You don't hire Albert Lee to sit on his hands. He's not the Maytag repair guy, He's there to get deals done. So I think you're going to see Anthropic. I think you're going to see OpenAI. I think you can see NVIDIA are all going to be making moves into security. You have to trust the data at the end of the day. You have to trust the model. We are the trust in the industry, right? We're the defenders. We're the people that you want to bring in to build trust into your platform. Microsoft didn't care about security for years. Actually, they were the problem. Everyone was popping Windows, right? And now they brag about how big of a security company they are. Same with Google. It's going to be the same with these frontier companies.
Yeah, I think that's a great perspective on it. I kind of figured you talk about the hyperscalers. I wasn't really looking at the frontier companies, but you're absolutely right. Because at the end of the day, and you just kind of really tagged it there, is trusted data, trusted models. That's really at the core of everything that you're seeing now in motion. So that makes all the sense in the world. Listen, Eric, truly appreciate you coming on. Great conversation. I'm sure the audience is going to really appreciate it. They know how to reach out to you now. They also will be able to, tag off of and go take a look and read for themselves the Cyber Almanac. But it's been a pleasure. I look forward to having you on in the future as well.
I had a great time, Rob. Let's do this like mid-year. We can see if any of my predictions came true, or what should we recalibrate as we're thinking into 2027.
Sounds like a plan. Let's do that. Thanks again.
All right, man. Thank you.
That wraps up this episode of Reimagining Cyber. If you enjoy the conversation, be sure to subscribe and share it with your friends. Thanks for listening, and goodbye.